The world of finance is an ever-changing and unpredictable landscape where even most established institutions can fall victim to the complexities of the market. In recent years, Silicon Valley Bank has emerged as a rising star in the industry, becoming a go-to destination for tech startups and innovative businesses seeking funding and support. However, in the wake of recent events, it has become clear that even Silicon Valley Bank is not immune to economic turbulence. This once promising institution has been hit with a series of setbacks, leading to speculation about its future and potential repercussions for the tech industry as a whole. The Silicon Valley Bank failure serves as a powerful reminder that no financial institution is invincible, and that even most successful institutions must remain vigilant in the face of uncertainty. In this blog post, we will explore the reasons behind bank struggles, examine the potential impact on its clients and investor from this sobering tale of financial instability in the tech industry. 1. On date, Silicon Valley Bank experienced a significant failure. On the date of January 30, 2022, Silicon Valley Bank experienced a significant failure. During this time, the bank's services and systems were unavailable to customers, resulting in a disruption of normal banking operations. Though the exact cause of the failure has not been publicly disclosed, it is reported that the bank is actively working to restore all systems to full functionality as soon as possible. We understand that this unexpected outage may have caused inconvenience to our customers, and we sincerely apologize for any inconvenience caused by this failure. At Silicon Valley Bank, we are committed to providing reliable and robust services to our customers and are working diligently to restore normalcy as soon as possible. We appreciate your patience and understanding during this time. 2. The cause of the failure has been attributed to reason. The failure of Silicon Valley Bank has been attributed to specific reasons identified by industry experts. Among the reasons responsible for the failure is the inability of the bank to adequately manage risk. Specifically, the bank engaged in high-risk lending practices, including investments in risky startups, without taking necessary precautions. This exposed the bank to significant losses, leading to its eventual failure. Additionally, the bank struggled with poor financial management practices, which further contributed to its downfall. In the aftermath of the bank's failure, it is imperative that financial institutions learn these mistakes and implement effective risk management strategies to prevent similar failures in the future. 3. The bank has released a statement apologizing for any inconvenience caused to customers. Silicon Valley Bank, SVB, recently experienced a widespread system failure, resulting in a disruption of their banking services for their customers. The bank has since released a statement apologizing for any inconvenience caused to their customers during this difficult time. As of their efforts to mitigate the issue, SVB has confirmed that their team has been working tirelessly to resolve the system failure and restore all banking services to normal as soon as possible. We understand and share our customers' frustrations during this time and assure them that we are doing everything in our power to resolve this issue promptly. We thank you for your patience and understanding as we work towards full resolution. 4. Silicon Valley Bank has assured its customers that it is taking all necessary steps to rectify the situation. As reported in recent news, Silicon Valley Bank has experienced a technical issue that caused several of its services to be temporarily unavailable. While this disruption may have caused inconvenience to some customers, the bank has assured the public that it is taking all necessary steps to rectify the situation. The bank's management has expressed its commitment to ensuring that its customers experience minimal disruption and that operations continue to run smoothly. The bank is working closely with its internal teams and external partners to resolve the issue as quickly as possible. Additionally, the bank has apologized to its customers for any inconvenience caused by the technical glitch and has asked for their cooperation as they work to resolve the issue. Silicon Valley Bank remains committed to providing high-quality services to its clients and is taking all measures to ensure seamless service. 5. Customers are encouraged to contact the bank directly with any concerns or questions. In light of the recent events surrounding the Silicon Valley Bank failure, we would like to remind our priority is ensuring customer satisfaction and maintaining transparency in all our dealings. Hey there, savvy customers. We know you've heard about the Silicon Valley Bank fiasco, but don't you worry, we've got your back. At our company, nothing is more important than your happiness and trust. We're all about keeping it real and straightforward with you. So, sit back, relax, and know that we're always here to make sure you're smiling from ear to ear. Hey there, savvy customers. We know you've heard about the Silicon Valley Bank fiasco, but don't you worry, we've got your back. At our company, nothing is more important than your happiness and trust. We're all about keeping it real and straightforward with you. So, sit back, relax, and know that we're always here to make sure you're smiling from ear to ear. As such, we encourage all our customers to contact us directly with any concerns or questions they may have regarding our products and services. Our team of trained professionals is available at all times to assist customers and provide them with the necessary information to make informed decisions. We take all customer concerns and feedback very seriously and strive to address them in a timely and efficient manner so as to maintain our high standard of service excellence. To conclude, Silicon Valley Bank's recent failure to properly identify and report suspicious activity is a concerning reminder of the importance of properly enforcing financial regulations. In this case, the bank has paid a hefty fine and taken steps to improve its oversight procedures about the integrity of the banking system and the need for consistent regulatory oversight. Moving forward, it will be crucial for all financial institutions to remain vigilant in detecting and reporting potential money laundering and illicit activities in order to maintain public trust.